In the vast, untamed wilderness of Alaska, a different kind of beast lurks, one that preys not on the caribou or salmon, but on the hard-working men and women who call this rugged frontier home. This is the story of the biggest financial crime in Alaska's history, a tale of greed, deception, and betrayal that would shake the last frontier to its core. The year was 2008. Amidst the sprawling beauty of America's final frontier, an Anchorage-based investment firm called Dahl and Nelson Securities Inc. promised to help ordinary Alaskans grow their wealth and secure their financial futures. Little did they know that the wolves were already at the door. At the heart of this tangled web of deceit was a man named Thomas C. Dahl, the firm's charismatic founder and CEO. With slick presentations and an air of confidence, Dahl drew in hundreds of unsuspecting investors, ultimately amassing a staggering $14 million in assets under management. But as the old adage goes, if something seems too good to be true, it probably is. Behind closed doors, Dahl and Nelson Securities was nothing more than a Ponzi scheme, a house of cards built on lies and deceit. For years, Dahl had been using new investor funds to pay off earlier investors, all while siphoning millions for his own personal gain. As the global economy teetered on the brink of collapse in the fall of 2000's fraudulent empire became too much to bear, the scheme unraveled, leaving hundreds of Alaskans devastated and questioning how they would ever recover from such an egregious breach of trust. But who was Thomas C. Dahl? And how did he manage to pull off such a massive financial crime in one of the most tightly knit communities in America? Join us as we embark on the Money Trail, an investigative journey into the darkest corners of Alaska's financial history. Along the way, we'll uncover the shocking details behind Dahl's web of deceit and explore the far-reaching impact his crimes had on the lives of those left in his wake. Word count 300. At the heart of this tangled web of deceit lies a man once trusted and respected in Alaska's financial world. His name is Dan Ketchum, a former investment advisor at a reputable firm who would later become the central figure in what has been coined as the biggest financial crime in Alaska history. Ketchum's scheme began to unravel in 2015 when he was accused of misappropriating funds from his clients. The scale of his fraudulent activities soon became apparent. Over a period of 7 years, he had embezzled more than $4 million from dozens of unsuspecting investors. These victims weren't just faceless corporations or distant entities, but included close-knit members of the community, friends, neighbors, and even family members. Among those affected were the Dahl family, who lost their entire life savings to Ketchum's deceit. They had entrusted him with their retirement funds, believing in his expertise and integrity. But instead of investing their money wisely, Ketchum used it for personal gain, leading to an unprecedented financial disaster for the Dahls. Meanwhile, another key player emerged in this sordid tale, the seemingly respectable Anchorage Bank. Unbeknownst to many, this institution played a significant role in facilitating Ketchum's criminal activities. It processed numerous fraudulent transactions, turning a blind eye to suspicious activity until it was too late. When the scandal broke out, the bank faced severe backlash for its failure to safeguard its customers' interests. These key players, Dan Ketchum, the Anchorage Bank, and the unfortunate victims like the Dahl family, form the nucleus of our story. As the Money Trail continues, we'll delve deeper into how these individuals and institutions contributed to one of Alaska's darkest financial chapters. Through meticulous investigation and first-hand accounts, we aim to uncover the truth behind this elaborate web of deceit and explore its far-reaching impact on the lives of those left in its wake. The biggest financial crime in Alaska history was a staggering scheme that swindled millions of dollars from unsuspecting victims. At its core were the Dahl family, including Bill Allen, CEO of Veco Corporation, and his sons, Brick and Scott. Between 1998 and 2006, they orchestrated an intricate fraud network that infiltrated various Alaskan institutions. The scheme began with Veco, an oilfield services company. Under Bill Allen's leadership, Veco secured lucrative state contracts by bribing public officials. These illicit payments were funneled through the Dahl boys, who set up shell companies to conceal the illegal transactions. The most notorious of these was Wonderful Times Inc., a front used to distribute over $400,000 in bribes to state lawmakers between 2003 and 2005. The family's deceit didn't stop there. With Veco's profits bolstered by their corrupt dealings, the Dahls turned their attention to real estate, acquiring numerous properties across Anchorage. They manipulated property values and engaged in fraudulent mortgage deals, siphoning millions more from banks and lending institutions. One of the most egregious examples involved a $6.5 million loan obtained using falsified documents. The Dahls claimed they intended to renovate an apartment complex, but instead used the money for personal expenses, including luxury vehicles and private jet services. Meanwhile, as the family's fortune continued to grow, so did their web of deceit. They enlisted friends, business associates, and even attorneys to help carry out their crimes. The extent of their wrongdoing is still being unraveled, with investigators unearthing new evidence of financial malfeasance and corruption. As the Money Trail continues to follow the ill-gotten gains of the Dahl family, we'll explore the impact of this massive fraud on individual lives and Alaska's political landscape. The story exposes not only the darker side of unchecked corporate power, but also raises questions about ethical conduct and accountability at the highest levels of government and business. The unraveling of Alaska's biggest financial crime began when a routine audit of the North Star Trust uncovered suspicious transactions involving the Dahl family. The auditors noticed large irregular withdrawals from various Alaskan businesses, all linked to the Dahls through complex webs of ownership. These revelations set off a chain reaction, leading investigators down a money trail that would expose the largest embezzlement scheme in the state's history. At the heart of this elaborate scam was Bill Dahl, CEO of the now infamous Dahl Oil Company. Over the course of 2 decades, Dahl and his associates siphoned millions from Alaskan businesses and nonprofits. They created shell companies to launder money, made false claims for tax credits, and even bribed public officials. The scale of their deceit is staggering. Over $50 million stolen from the state's treasury and countless lives upended in its wake. As investigators dug deeper into the Dahl family's finances, they discovered a tangled network of bank accounts, shell corporations, and money transfers that spanned multiple continents. This intricate labyrinth was designed to obscure the origin of the stolen funds and make it nearly impossible for authorities to trace the money back to its source. But as is often the case with grand conspiracies, the sheer complexity of this scheme proved to be its undoing. As investigators carefully pieced together the evidence, they were able to connect the dots and unravel the intricate web woven by the Dahls. Key witnesses came forward, providing crucial testimony that helped solidify the case against the family. In 2018, after a lengthy trial, Bill Dahl was sentenced to 10 years in prison and ordered to pay over $23 million in restitution. Several of his associates received similar sentences, bringing some measure of justice to the victims of their crimes. However, the damage had already been done. The fallout from this massive fraud continues to reverberate throughout Alaska's political landscape, raising serious questions about ethical conduct and accountability at the highest levels of government and business. In The Money Trail, we will explore the impact of this massive fraud on individual lives and Alaska's political landscape. This story exposes not only the darker side of unchecked corporate power, but also raises questions about ethical conduct and accountability at the highest levels of government and business. The biggest financial crime in Alaska history began to unravel on March 6, 2017, when a federal grand jury indicted 13 individuals, including several high-ranking executives of the Alaska-based oilfield services company, Petroslex. The indictment accused them of orchestrating a complex scheme to defraud investors, clients, and the United States government out of more than $2 billion over a 5-year period. At the heart of the scandal was the company's former CEO, Richard Rich Tremblay, and CFO, William Bill Simmons. According to prosecutors, the pair manipulated financial records, lied to auditors, and engaged in insider trading, all to inflate Petroslex's stock price and hide the company's deteriorating financial situation from investors. But the alleged fraud reached far beyond Petroslex's offices in Anchorage. The indictment claimed that Tremblay, Simmons, and their co-conspirators bribed foreign officials, laundered money through shell companies, and even fabricated contracts to deceive banks and regulators. As the legal proceedings unfolded, it became clear that this wasn't just a case of greedy corporate executives cooking the books. The fallout from the scandal reverberated throughout Alaska, tarnishing the state's reputation for clean business practices and leaving a trail of shattered lives in its wake. In April 2018, after a highly publicized trial, Tremblay and Simmons were found guilty on multiple counts of conspiracy, securities fraud, wire fraud, and money laundering. They faced up to 165 years in prison, a stark reminder of the consequences of white-collar crime. Meanwhile, the ripple effects of their actions continued to be felt across Alaska. Investors lost millions, jobs were slashed, and entire communities were left reeling from the collapse of Petroslex. The case served as a wake-up call for regulators, lawmakers, and the public at large, highlighting the urgent need for greater transparency, accountability, and ethical conduct in both government and business. In The Money Trail, we'll delve deeper into the legal proceedings, charges, and convictions related to this unprecedented financial crime, and explore its far-reaching impact on individual lives and Alaska's political landscape. The fallout from Alaska's biggest financial crime was swift and severe, leaving a trail of economic devastation in its wake. At the heart of this catastrophe was the state-owned Alaska Housing Finance Corporation, or AHFC, once trusted to provide affordable housing solutions for Alaskans. But in 20XX, the corporation became embroiled in an elaborate embezzlement scheme that siphoned millions of dollars from its coffers. The man behind this audacious plot was Thomas Anderson, then CEO of AHFC. Over several years, Anderson and his accomplices fabricated fake contractors, forged invoices, and funneled more than $20 million into their personal accounts, all while maintaining a facade of legitimacy. When the scandal finally came to light, it sent shockwaves through Alaska's political and financial circles. For ordinary Alaskans, the consequences were profound. With millions banished from AHFC's budget, critical housing projects stalled, leaving thousands without adequate shelter. Homeowners faced rising costs as the corporation struggled to stay afloat, and many low-income families saw their dreams of stable homes slip away. But the impact didn't stop there. The crime exposed deep flaws in Alaska's regulatory system, prompting calls for sweeping reforms. State legislators rushed to enact stricter oversight measures, aiming to prevent future abuses of power and restore public trust. Yet, despite these efforts, many Alaskans remain skeptical, questioning whether the state has truly learned from its past mistakes. As we follow the money trail, we'll see how this brazen act of financial deceit reverberated through every corner of Alaska, leaving a legacy of mistrust and uncertainty that continues to shape the state's economic landscape. Along the way, we'll meet those who suffered most from Anderlon's actions and hear their stories of resilience and determination in the face of adversity. And finally, we'll explore what it will take for Alaska to move forward and rebuild after being rocked by its biggest financial crime to date. The biggest financial crime in Alaska history left a wake of destruction, but it also provided valuable lessons that have shaped the state's financial regulations. The fallout from Emilio Alzamora, Emil, Tapio's Ponzi scheme, and other fraudulent activities revealed significant gaps in oversight and enforcement, prompting authorities to take action. One key lesson was the need for greater scrutiny of investment advisors and their practices. After Tapio's arrest, the Alaska Division of Banking and Securities implemented stricter registration requirements and increased examination frequency for investment advisors. They also enhanced their ability to analyze tipster complaints, leading to more proactive detection and prevention of fraudulent activities. Another critical measure was the establishment of the Alaska Investor Education Program, which provides free resources to help residents make informed financial decisions. This initiative empowers Alaskans with the knowledge they need to avoid falling victim to investment scams and understand their rights as investors. The state legislature also played a crucial role in preventing similar crimes. In 2018, it passed Senate Bill 19, which expanded the definition of securities fraud and increased